Good evening. All right, well, typically when I do a presentation, I'm like a statistic junkie. And I start looking up and doing research, particularly research that would be helpful to entrepreneurs. But, we came across like 3 or 4 different statistics that I think are interesting. Of course, one of them that inspired the theme of this event. So I'll share that with you. So here's a couple of statistics, and I'd like to get the audience feedback. Here's one statistic that was very interesting. So I learned that in the last 14 years, college tuition has gone up by 30%. Now, I graduated college, I graduated law school, I went to Fordham University School of Law, and I remember the tuition being $30,000 a year. And I took out loans, by the way, to pay for that. And now I learned that it's like close to $50,000. So 30%. And I don't have kids, and it almost makes me want to have dumb kids so I don't have to pay for tuition. So that's a statistic and very interesting. Here's another statistic that was very interesting. 67% of all human beings wake up to some sort of negative emotion. And I just can't believe it. Negative emotion. How many people here know people who are negative? Raise your hand. How many people here are negative? Of course, no one admits it. But either or, this was a very interesting statistic to me. And now I know why the coffee business is big. So there's another statistic. Here's a statistic. 70% of people in the United States of America think that public speaking is worse than death. They have a fear of death more than public speaking. Now, if you don't have experience public speaking, I can understand that. It's pretty intimidating if you don't have experience. But it just makes me think, how many here in this room think that death is worse than public speaking? There you go. So how many here think that public speaking is worse than death? No one. So that means 70% of the population thinks that if there's a funeral, the person in the casket is worse off than the person giving the eulogy. So it's just one of those things that people it's an amazing statistic. Now, here's a statistic that actually motivated the theme of this event. 93.4% of all entrepreneurs actually think it's harder to grow your company today than it is 20 years ago. 93.4%. How many here believe that it's actually a little harder today than grow a company 20 years ago? Honesty. How many here think it's easier to grow a company today than 20 years ago? Look at this, 50-50. I just want to get a little feedback from the people who think it's harder to grow a company 20 years ago. Why do you think that?
More competition.
More competition.
Markets are more transparent.
What else?
Communications is so much easier today. You can get your message out like you never could 20 years ago.
Yeah, but you're arguing for the easier. It's easier today.
It was harder 20 years ago.
You think it's harder 20 years ago?
Absolutely.
Who thinks it's harder 20 years ago? Why do you think it's harder 20 years ago?
Because we just didn't have the connectivity that we have today. Connectivity is a huge asset, as is transparency when you're running your business in a way that's ethical and that creates win-wins for everyone.
So you think it's harder, actually, though, still to grow a company today?
No.
You think it's easier? Who thinks it's harder? I just want to hear the argument for harder. Why is it harder today?
There's far more regulation by the states, cities, the federal government, than there were 20 years ago.
Okay, so the regulations. Gentleman over there.
Public were not as savvy. They were referring
Okay. So, you know, you have a mixed breed. And here's the thing. I want to share with you today 2 ideas, 2 concepts on how to grow your company. Who here owns a company that sells to another commercial entity? You're deemed as a B2B business. Who here is an owner of that kind of business? Who here is an advisor to that kind of business? An advisor. Right. Today, I want to share with you 2 concepts on how to grow any B2B business, how to develop it, how to double the company in size, how to develop sales 20, 30, 40, 50%. If you want to grow your business, who here wants to grow their business? Who here honestly wants to grow their business? You're in the right place, because I'm going to share with you 2 concepts. But it's not just the 2 concepts I'm going to share with you. The 2 concepts, I'm going to share with you some additional information. I'm going to share with you a mindset that can help you implement the 2 strategies that I'm actually going to share with you. A mindset. Because oftentimes our mindset is what prevents us from actually implementing. The second thing I'm going to share with you is a formula. A formula for diagnosis. A formula that helps you keep you on track. A formula that helps you understand what are the weaknesses, what are the strengths of your business, and what you could do to actually grow your company so that you can stay on track. And that's what we're going to talk about today. So, first thing we're going to talk about. I want to share with you a formula. And I've been studying this the last couple of months. I'm trying to figure out what stops people psychologically from actually growing your business. Let's talk about the mindset. First step. Now, I came across 2 concepts. It's called vision and hope. But what I learned was the contemporary definition of vision and hope is a little different from what vision and hope might be in the ancient world. So let me get some feedback from the audience. When you think about vision, what do you think about? When you think about vision, let me get someone from the audience. Define vision in English 2014.
Ideas and advanced understanding of something.
All right, so you have a vision, you have an advanced understanding of something. Like a long-term goal. A direction. Focus direction.
Just seeing. Maybe seeing what's hiding in plain sight.
Just seeing.
To have a feel for what the future holds.
Have a feel for what the future holds.
Picture for a new future that gives you inspiration and direction.
There you go. So here's the words I see. Direction. I see. Right? But some of this is a little esoteric. It's a little general. So I want to share with you something. The ancient Greeks and the ancient Hebrews had a different view of what vision was. They had a totally different view of vision. Now, I also looked at the contemporary definition of hope. Let's get from the audience. What's hope? A contemporary definition of hope, an English version of hope. Who can give me hope?
Wishful thinking?
Wishful thinking. Like, I hope this winter ends. I have not paid attention to the winter forecasts, but I paid attention to the groundhog. I hope this winter ends. It's terrible. Any other definitions of hope?
It's an emotion that anticipates a positive future outcome.
A feeling that anticipates a positive future, a feeling,
An emotion.
an emotion. So is it emotion or is it confidence? Or is it just a feeling that you hope that things work out? A desire. All right, so
Because it could blow up.
there you go. It could work out, but it may not work out. So you have vision, where it's like a thing that's you see, and you have hope that you hope things work out. But I've been studying the ancient Greeks and the ancient Hebrews, and they had a different, totally different version of what vision means. So vision meant a precise, clearly defined goal with a detailed plan and a timetable for achieving that goal. Aristotle calls it your personal philosophy. In fact, he goes further and says it's your law, your personal law. Now, who would agree that when a government enacts a law, that they want that law to be precise? Who would agree with that? And the purpose of that law, yes, and the purpose of that law is to govern. Right or right? All right? So the law is to govern. So here you have a vision that what? That has specificity. Because from the ancient Greek standpoint, it's precise. A clearly defined goal with a detailed plan and a timetable for achieving that goal. So let me give you an example. I have a colleague named Arnie. Arnie, raise your hand. There you go. Arnie is a gentleman, very accomplished business person, owns 7 Burger Kings. He's been working with us as a partner in Manhattan for years and years. And we had a chance to meet a gentleman who owns a meat distributor, a meat distribution company in Elizabeth, New Jersey. Now, I've met with him 6 or 7 different times for lunch, and Arnie one time joined us one time to have a lunch with him as well. So this gentleman has, let me describe the company. He does $50 million in revenue. He makes income of $3 million, right? And all he basically does is distribute meat. He distributes turkey, he distributes beef, he distributes basic meat. And he has a food processing component to his business as well. And he basically distributes this meat to other restaurants. And what's amazing about this gentleman is he has 900 business accounts. 900 business accounts, all restaurants. And he does $50 million in sales, and he does $3 million in profit, and he is the sole owner. And he's been in the business since the 1960s, and he's 83 years old. So I met with this gentleman. So one of the lunches, and Arnie, you wasn't with this lunch, but this was a very interesting lunch that I had with him. So I decided to pick his brain. I just wanted to, we had some brains. We're thinking about doing business. We're thinking about raising money, maybe potentially selling his business. We're in talks with him. But I had a lunch with him very recently, and I decided to pick his brain. And I wanted to know, what is the key to your success? How do you make $3 million a year? How do you do $50 million in revenue? How do you have 900 restaurant businesses as your accounts? How does that happen? How does that work? So I said, what's the key to your success? You know what he told me? Very interesting. That's why I bring this up. He says he plans out every quarter to the fullest. So every 90 days, he has a planning system. And what he says is, when he goes into a quarter, he decides how many sales he's going to have, how many new customers he's going to procure, what's his gross profit margins going to be. He finds out, he kind of determines how many new customers he's going to get. And one thing he did determine, he says, every year he wants to make 1 business acquisition. Who would agree that that's pretty specific? Who would agree with that? So, what's the key to a vision? Specificity. He was very specific and clear in what he wanted. Now, most people, they either have no vision at all, or their vision is very cloudy, and there's no clarity. With this gentleman, he knew exactly where he wants to be every quarter. So he doesn't plan from a yearly standpoint. He doesn't plan from a 5-year standpoint. He plans every quarter. And so when you think about vision, the ancient Greek standpoint of it, when you think about Aristotle, in terms of it being your law, we're talking about specificity with regard to what you want. Figure out what you want in your business. How much sales do you want to have? How many customers do you want to have? What your gross margins are? What your net profit is? Determine where you exactly want to be, and then you will have the vision that you need in order to propel you to success. Now, there's a saying in Proverbs 29:18. Very interesting. I like this Proverbs because this now determines the ancient Hebrew version of what a vision is. This is Solomon. King Solomon wrote the book of Proverbs. He's the richest man in the world. And he wrote, "Where there is no vision, the people perish. But happy is he who keeps the law." Right? If you have no vision, what happens to your business? What happens? Crowd. It what? How about this? It perishes. How strong is that word? It perishes. How true is that? Think about the statistics. 4 to 5 businesses, first 5 years within existence, collapses. They went out of business. I think going out of business is a nice word. What happened to those businesses? What happened to them? They perished. Think about the word, perished. This is a powerful word. 4 to 5 businesses. How about this? 10 years, within 10 years, 8 out of 10 businesses go out of business. When a business goes out of business, when the doors are closed and the lock is locked and the government shuts you down, what happens to that business? It what? It perishes. And what happened to those businesses? Oftentimes, there wasn't a vision. There wasn't clarity with regard to where the business or the owner wanted to take the business. There wasn't any clarity, or there was no vision. And what happened to the business? It perished. But you know, the second part of this is happy is he who keeps the law. In other words, if, like this gentleman, this meat distribution company, 50 million in sales, 3 million in profits. He wanted to, you know what he told me? He said, every year, I want to increase my customer base by 20%. I want to increase my customer base by 20%. And you know what also he told me? He said, every year, I want to increase my sales by 15%. Very specific. So that specificity became his law. And that law kept him focused. So, now, we talked about vision, but without vision, you need hope. Now, I'm going to go back into the ancient Greek and the ancient Hebrew view of what hope is. We talked about the contemporary view of hope, which was a wish, right? Someone said a wish that may or may not be fulfilled. A wish. Well, from the Greek and Hebrew definition of hope, it's a well-founded and confident belief that a specific vision will be achieved or fulfilled within a specific amount of time. So you have your vision, and it's specific, but you need to have the belief or the confidence that you could achieve it. Because without the belief, then you can't achieve the vision, and it's the belief that enables you to propel yourself to action. It's the belief level. Without the belief, and I'm going to talk to you about the 2 strategies I'm going to talk to you about in terms of growth, that what mainly prevents people from growing is their belief system. That's what prevents them from growing. So it's this belief of hope. So let me give you an example. We have a client, Louise. Louise, raise your hand. I met Louise a few years back. Remember that, Louise, right? Louise was a partner in a pharmaceutical company, a specialty pharmacy business, doing about $4 or $5 million in revenue. And she was a partner. And she was, her partner wanted to sell the business, right? Wanted to sell the business. And wanted to take you for the ride. And had your partner sold, you would have been out of business, right? You would have had to find out what you wanted to do. So I met them. Now, Louise, you didn't have your disposable income to buy your partner out, right? So I met Louise. And she wanted to be in the business. She had spent years in the business, growing it from scratch. Remember, Louise? Opened the doors, got the initial customers, grinded it out, didn't take any salary, right? But now your partner wants to sell, and you don't know what to do, right? So I met Louise, and we talked about selling the company on her behalf. But what happened was, I determined that, you know, Louise, you have the capability of running this business. And Louise told me that. Louise came out and said, you know, I can run this business without my partner. Right, Louise? She had retail experience. Years of it, right? 25 years of retail experience. And she told me, Julio, I could run any business. Any business. And this business I could run. The only part that I don't understand that well is the pharmaceutical part, right? The pharmacy part. But if you give me some time, I'll figure that out. So what does she have? Hope. In the Hebrew definition. In the Greek, the ancient Greek definition of it, which is a confident belief that she could achieve a goal. So what happened? I let her know, listen, Louise, we could raise you the money. You could buy out your partner. You could run the business. And until when you found that out, what happened?
I had hope and we did.
And we did it. And now she owns 100% of the business. And she's doing well. That's it. But what you have, you had the hope. You had the confident belief that the vision that you had, which was, and the vision that you projected to me was, I could run this business. I could run it from soup to nuts. And you actually outlined for me how you could do it. So you demonstrated this hope. So you have the vision, but you need the hope. You need the confident belief. So, ancient Hebrew. You know, I have a colleague, Arnie, who's taught me a lot of Yiddish words. But Arnie, I've graduated. Now I'm going to Hebrew. Hebrew, yakal. That means trust. Right? But it's hope. It's hope, but what it is trust to patiently endure because of assurance that something will happen. Now what's interesting is this, is as I'm studying this definition, it makes me think of a woman named Cynthia Greenwald. Cynthia, raise your hand. Everyone, look at Cynthia. Now, I'll tell you a little bit about Cynthia. Cynthia is an expert in networking. She teaches people how to network. Now, networking is a long-term play. It's a long-term way of developing your inner social circle so that you could develop business long range. And Cynthia has all the expertise and what you need to do to network in order to bring in business to your company, right? So what's interesting is I was at Cynthia's training the other day, and Cynthia suggested, allow me to quote you here, Cynthia suggested that it could take a year to 2 years to develop a network where you get returns on your networking, right? A year to 2 years. Now, If you don't have assurance or confidence that something can happen, you won't put in the work that's necessary in order to develop the business that Cynthia is suggesting that you could develop. So this concept of hope is important to your vision. Because without the confident belief that something can happen, then it will never happen. There's a Greek word, elpis, to expect or anticipate with pleasure, right? So very simple to yakal. And these definitions are different from the contemporary use of hope. So with regard to the mindset of going forward with a business, with growing a business, you have to have vision, right? And now with vision, your vision needs to be what? Clear, specific. You need specificity. And you need hope, which from the Hebrew standpoint or from the ancient Greek standpoint is a confident belief that something will happen within a reasonable period of time. So this is very important. This is a formula. Vision plus hope. Without this mindset, I don't think it's possible to execute the 2 growth strategies that we're going to share with you. Now, here's a proverb. Hope deferred makes the heart sick, but desire fulfilled is a tree of life. Proverbs. More evidence of the ancient Hebrew view of hope. All right, now I'm going to share with you, before we get into the two growth strategies, I want to share with you a formula, a formula for business expansion. And really, the formula is based on diagnosing your own company. You look at your business and you say, you know, where am I strong? Where am I weak? What can I do to grow this company, right? So, we call it the business growth triangle. The business growth triangle. I want you to think in terms of everything as the business growth triangle. What's the business growth triangle? Now, it's a brilliant formula. Partly because I invented it. But this is based on analysis of thousands of businesses, literally hundreds and maybe over 1,000 businesses. And we've come up with a business growth formula. What's the business growth formula? Well, here's the triangle. You have sales on the top. And you have on the other 2 parts of the triangle, you have profitability and cash flow. And then you have the bottom is enterprise value. Now notice that the triangle on the triangle is wide. And it says enterprise value, right? What's the goal of every business at some point? What do you want to do with the business at some point? What do you want to do with it? Sell it. Sell it. Terrence Cash. Raise your hand. This is a gentleman. You told me a remarkable story, right? You owned the business. You built it up for years, right? What is it, in the IT space? In the IT space. And you sold the company for like billions of dollars, right? 8 figures, right? And you were pretty young, right?
I'm 52 now. I was like 8 years ago.
8 years ago. And how long were you in this business? 16 years. Did you make more business selling than you were staying in the business? So why is this triangle? Why do you have this big line on the bottom? Because you make more money selling your company than you do running it. Is that correct? Any owner who really builds a business will always tell you, I made more money selling than running it, if they built a successful company. Why is that, by the way? Just from your perspective, why did you make more money selling it than running it?
Well, mainly because the buyer's perception of the value is greater than what you put into it to get it there.
There you go. Also, from a tax standpoint, were you taxed less when you sell the business? Were you able to develop a big bulk amount of cash at the end? And you could do anything with that money, right? So understand why the triangle, how the triangle is constructed. Your end goal is to sell it. And you can do anything you want after that if you sell it for a decent sum of money. So, sales. Let's talk about sales. Sales. Sales is very simple. I go into a business, and if they have a sales problem, meaning they're going backward in sales, typically what happens is they're not generating enough leads, and they're not converting enough of those leads into sales. So usually when someone has a sales issue, they're just not generating enough leads. They don't have enough new business or new leads coming in. Sometimes the business has a lot of leads, but they're just not converting any of the leads to sales. So it's one of the two problems. You either have a lead generation problem when you have a sales problem, or you have a conversion problem, meaning you're not converting enough leads that come across your business into new clients. That's when you have a sales problem. Now let's go into the other two. Profitability. When are you not? Now, I want to hear from the audience. When you're not profitable, what are some of the problems you think you're facing? Well, not enough revenue. Certainly, without sales, you can't produce profitability.
Inability to capitalize new growth.
Meaning you're not capitalizing.
You can't capitalize new growth because you don't have enough profits in order to allocate.
You don't have enough cash, in other words.
Right.
Okay. What else?
Too much cost. High cost.
Too much costs. All right. All of those responses I like, but they're wrong. I respect them though. Here's the thing. I'm going to tell you what drives profitability. There's only two things that drive profitability. The first thing that drives profitability is the retention of customers. You get a customer, they stay, they keep on paying, right? How much money do you have to allocate towards them to keep on paying? How much? How much marketing dollars do you have to spend in order to keep your existing customers to keep on spending with you? How much money? Typically what?
Not much.
How about zero? Very little dollars spent on keeping customers. So if you keep a customer, chances are they're going to keep on paying, and you're on the road to profitability. Now, there's a second thing that drives profitability. It's called gross profit. Gross profit. Now, gross profit is sales minus what? Any accountants in the room? Oh, you have an accountant in the room. Gross profit. Sales minus cost of goods. Sold. But when you say sales minus cost of goods, don't you mean sales minus cost of goods, cost of labor, cost of delivery? Is that true? So any cost associated with producing a sale, right, is allocated towards cost of goods. So your gross profit after that is your profit after your cost of goods, right? Is your net. So typically what happens is if your cost of your good is too high and your cost of your labor is too high, what happens to your profit? It's down. So when I see a business that has profit issues, I normally see a problem with retention and I see a problem with gross profit. There's a control issue, right? Cash flow. What is cash flow? Cash flow is, how about this? I want to pose to the audience. What's the difference between cash flow and profit? Yeah, Nadine, right? She says everything. There's a big difference. What's the difference? Can someone articulate the difference between cash flow and profit? The ability to pay your bills on time. Yeah, Doc.
Timing of income so you can meet current liabilities.
Say that again?
Current income, your current income to meet current liabilities.
Current income to meet current liability. Sam.
Cash flow is the lifeblood of your business. Profitability is how you look on paper.
Well, Sam hit it on the note. You can be profitable, right? You can be profitable, but if you don't have any money in the bank, the profit doesn't feel good, right? Profit's almost like the reality. So what's cash flow typically is a situation where if you look at your suppliers and let's just say you sell to customers. Who here sells to customers where you extend terms to the customers? Who here extends terms to their customers? All right, good. You extend terms to the customers. And maybe what, like 30 days, 60 days, 90 days?
No, not 90.
How much? How long?
30.
30. Who extends 60 days? Or who's in a business where you have to extend 60 days or longer? Who's in a business that you have to extend 30 to 60 days?
Not willingly, though.
Not willingly. You see, a lot of people don't admit this. Sometimes some of your best customers won't pay you till after 30 days, right? Who's had that experience? You have a good customer, and they don't pay you till after 30 days. All right. So here it is. Cash flow is the difference between when your customer pays and when you have to pay your suppliers. So if you have to pay your suppliers COD and your customers, you offer your customers 30 days term, what's the difference between the two? How long? 30 days. Which means you have a 30-day cash flow gap. Now you can be profitable. I could buy the product for $5 and sell it for 15. So technically, I make how much of a profit if I do that? How much?
66%.
Look at this. You are a mathematician. 66%, but $10, right? If you bought the product for $5 and you sold it for 15, you have a $10 profit. But if you had to lay out the money for $5 right away, and you had to collect the $15 over 60 days, what gap do you have in what? Cash flow. So your cash flow is a gap between selling and buying. And normally when I see a business that has cash flow gaps, they usually have a gap in their capital raising. They don't have the proper capital raising strategy. Either they have poor positioning with their suppliers and their customers, or they don't have investors that will actually fill in that gap so that they could proceed and grow their business.
Also, cash flow is the ability to meet paying your bills directly impacts profitability because of finance costs, to not allowing vendors to collapse your profitability by taking money from you based on financing charges and different types of late fees, and the inability to work with you based over the time that they don't want to extend what, like BT says, 30 days.
But the question is whether the financing charge, how does that impinge upon the profitability? So you can afford to do the financing if you're making a 66% profit, if it brings it down to 40%, let's say. So that's the decision that I'm making. That's why they use receivable financing and factoring, which is what the bank does, which is what I do.
Well, you're making a point. In other words, all these components affect one another. And it's synergistic. So as a business owner, when you're growing your company, you have to think in terms of growing your sales, growing your profitability, growing your cash flow, and the final thing, growing your enterprise value. Now, quick thing on enterprise value, because I'm not going to get into a synopsis of how to grow the value of your business because we don't have a lot of time. but I want to make one point on enterprise value. I'll tell you the most valuable part of enterprise value. How do you really make your company valuable? And the way you make your company value is to actually develop recurring revenue. If you have clients that pay you all the time, and they do it over a long-term basis, then you have something to sell. If you're selling your product one time and getting paid one time, then you don't really have much to sell. And that's what I'll say about enterprise value. So let's get into 2 quick growth strategies. So we have the vision and the hope. That's the mindset. I need a specific plan. And the hope, the confident belief to grow your company. You have those 2 components. And then you have the business growth triangle, which is sales, cash flow, enterprise value, profitability. And you need to grow all those components all at once. Right? So you have that. Now I'm going to share with you the 2 components, the 2 ways you grow any B2B business. Now, I want to talk to you about the business growth triangle before I get into this. We had a client who was in the information publishing business. Arnie, you know this client. There was a time, he was in the information publishing business, he had major corporate accounts, and at one point, you're going to kind of laugh at this because this is kind of unusual. He was doing $1.2 million in revenue, but he was making $1 million in clean profit. Clean profit at $1.2 million sales. Who would agree that that's a little abnormal?
Sounds good.
So $1.2 million sales, $1 million profit. Huh? Mean and lean. Now, this client at some point got a little lazy, and he didn't add more leads. He didn't generate more leads. He didn't generate more customers. He didn't generate more cash flow. He wasn't paying attention to his business. And at some point, his business went from $1.2 million in sales to $900,000 in sales. And his profitability went from $1 million to $600,000-$700,000. And we had an offer on the table for $4.5 million, with $2.5 million cash up front at the closing table. Terrence, that's a good deal, right? Even by your standards. By any standards. $4.5 million, $2.5 million up front. But because he didn't pay attention to the triangle, he didn't want to grow his sales. He didn't want to grow his enterprise value. He didn't want to grow his cash flow. He didn't want to grow his profitability. He stayed complacent. His sales went backwards. His profitability went backwards. And he saw the offer, and it was at $4.5 million, and he rejected it. He said, you know what? I'm going to hold on. But he did not continue to grow his business. A year later, he rejected the offer we brought to the table from a third-party buyer. The same buyer decided that he still wanted to buy the business. But the sales went down. It went down from $1.2 million to $900,000. The profitability went from $1 million to $600,000-$700,000. He wound up settling for $2.5 million with $1.6 million down. How much money did he lose? He had $4.5 million, now he has to take a deal for $2.5 million. How much money did he lose? $2 million in a matter of 1 year because he didn't pay attention to the business growth triangle. Real quick. Now, I want to focus you on 2 fundamental strategies, how to grow any B2B business. Doesn't matter how smart you are, doesn't matter what level of business you are, you can do it. 2 fundamental strategies. First step It's a process by which we call outbound marketing. I'm going to read this to you. Outbound marketing. The process in which a B2B company actively pursues personal and physical interaction with its target market for the purposes of selling their product and service. It's a proactive effort for the purposes of selling your product or service. All right? Now, I want to define this a little bit. If the definition of the relationship is important, this is not networking. This is not building a long-term relationship. This is the active, proactive effort to get in front of your target market, the actual entities you serve, and defining yourself as a salesperson. Now, no one defines himself as a salesperson. You ever hear the terminology business development? Who's heard of that? No more. No one says they're a salesperson no more. Now they say I'm in business development. But all that means is sales, right? So, you proactively pursue your target market to sell. Now, there's a definition. You define your relationship. Now, you're defining yourself as a company that wants to sell to them. And you're defining them as a company that you can serve. So there's a two-way definition. And what's interesting is that I've actually studied casual dating. I've made that a study because it's very similar to outbound marketing. So I've made a study, casual dating. Who's single here? Raise your hand. All right. So one of the things is when you're single, right, and there's a bunch of single people in the room, that now you have to go and learn how to casually date, right? Particularly if you're a man, you have to pursue a woman, and you have to talk to her, which is a form of what? Physical and personal interaction. That's proactive, right? And I remember going online and studying a seminar on casual dating, and they said one of the mistakes that men make is that they don't define themselves properly. Sometimes they try to manipulate the woman on the other side and to state that they're not really interested in her, that they just want to be friends with her. But by doing that, that's a mistake because they don't define themselves. And by not defining themselves, the other side thinks that you're not confident enough to assert what you want. So when we talk about defining yourself, is you define yourself as a company that wants to sell, and the other side, you help define them as an entity you have experience serving. So they're a typical client. You say to yourself, hey, Doc, you own a security company, and you're doing millions of dollars in sales, and you have a bunch of employees in the B2B arena. You know, Doc, we have like 10 clients just like you. And then I assert myself by saying, we think we could do business with you because you're the type of client that we've done business with. I define myself as a company that can sell to you, and I define you as an entity I can serve. So the key to the outbound marketing is a proactive effort to constantly be in front of your target market. And that's outbound marketing. So, some components to outbound marketing. And I'm going to quickly go through this. The first thing you need is a prospect list. You need to determine who do you want to serve. You need someone to get on the phones and make calls. Now in the day of modern day technology, you need a CRM system. You need a closer. Someone aimed towards what? Actually closing the sale. And the last thing you need is online technology. This is like your Facebooks, your LinkedIns, right? Your Twitters. You need to have all this online technology in place in order to manage the relationships that you're trying to develop. Right? So very important. So that's components of an outbound marketing system. Now, I'm going to give you the secret to outbound marketing. Just a real easy way to think of outbound marketing. Never sell your product or your service or the event or the change. It's the biggest mistake that companies make. They try to sell their product, they try to sell their service, they try to sell the change. They try to sell the idea. Here's what I want you to focus on. Sell the results. What will result in the actual sale, the post-sale? It's different from benefits. When I say results, I mean when the sale is made, what will happen? I'll give you an example. I'm going to be 36 years old in June. I'm not married. And I have a colleague, Arnie, right? We go out sometimes. Now, Arnie, raise your hand. He's a colleague of mine, very distinguished business person, owns 7 Burger Kings a Friday. This is a tremendous business career, a great success story. So Arnie and I, over the years, are a little bit more than just colleagues. We've actually become friends. And we actually go out. So, the similarity that me and Arnie have, right, is that we're both young and single and ready to mingle. Right? Me and Arnie could go anywhere. He's like a wingman, this guy. Me and Arnie go out. So we're young and single and ready to mingle. Let's just say we want to buy a car, right? We go to a dealership, right? So one salesperson approaches us, and they show us this car. And the car is red. And the salesperson says, wow, what a red, this color is unbelievable. The windows are unbelievable. The engine's unbelievable. What is he selling? Is he selling the product or service? But let's just say, same dealership, different salesperson, and he says, after finding out that I'm young, single, and ready to mingle, after finding that out, he says, listen, you're going to drive this car, you're going to drive it down 80 miles an hour down the West Side Highway, the wind's going to blow in your head. Arnie has more hair than me, actually. But the reality is, he says, all the girls are going to be all up on you. It's going to be an unbelievable experience. What's he selling? The results. After the sale, he's going to say, listen, this is what's going to happen. So, for instance, we have a networking group, right, that Marty, my partner, and Cynthia, raise your hand, that we're developing. And we're developing this networking group. It's called BizGro Alliance. So what we're doing is we're putting business owners together in a room, and we're trying to get them together a couple of days in a month. And one meeting will be dedicated towards networking, and the other day will be dedicated towards actual education, kind of like what we're doing here in terms of business development topics, right? So if I approach someone and says, I want them to be a part of the group, if I say, listen, Cynthia, you can join the group. You'll have a nice time. We'll have breakfast 2 times out of the month. You'll get to meet great people. Yeah, we'll get together. Maybe we could do business. What am I doing, Cynthia? I'm trying to sell what? Yeah, the actual service. It's a service, right? But if I say, Cynthia, you join our group, you're going to get tons of referrals. You're going to meet great people, but they're going to lead to business. It's going to lead to sales. You're going to get leads. You might grow your business by 10, 20, 30% just on the people that you actually meet, right? And you're going to get actual education that's going to increase your skill sets that we don't even know what's going to happen with regards to the increase of your skills. but it's going to lead to more profitability. What's going to happen? Right? What am I selling? The results. So the key to outbound marketing, you go after your target market, sell the results. Never sell the product or service, the idea, sell the results. What's going to happen after the sale? Because if you sell the results, by the way, little feedback from the audience. If you sell the results, what have you created in the buyer's mind? Think about that. Huh? A vision? Actually, that's interesting because what does a vision, in the ancient Hebrew standpoint, right? A vision is what?
Precise plan.
Precise, specific, right? So if you sell results, there's clarity. And with clarity, someone can make a decision. All right, second idea. I'm going to go do this quick. And I'm going to get my esteemed colleague up here. Real quick. Business acquisitions, right? A lot of B2B businesses, oftentimes they think in terms of, I want to get more customers. But one of the strategies that they're missing out on is all they have to do is acquire another company. They could double or triple the size of their business just by simply acquiring another business. So, one of the things about business acquisitions that I always notice is it's an accelerated growth strategy. But more important, it's a great strategy for savvy people, smart people. People who see themselves as, hey, I understand financials, I understand financing, I understand accounting. That kind of business owner could do very well with business acquisitions. So, here's the question I want to get from the audience. If business acquisitions are so great, what prevents people from doing it?
Money.
What'd you say? Money. Money. Any other answers?
An emotional connection to your business.
An emotional connect. Well, describe that. What do you mean by that?
Well, you got some people who just want to stay in their business because they love what they do and they don't want to sell it.
Yeah, but what does that have to do with acquiring other companies?
Oh, I'm sorry, I didn't understand.
Yeah. What prevents people from acquiring other businesses if it's such a great strategy? Besides money, because it was mentioned.
Maybe not putting enough time into creating a strategy to do that. It just doesn't seem obvious.
Yeah, Marty. Fear. A lot of fear. Huh? Responsibility. Gentleman over there. Just fear, right? All right. I want to demystify all of this. I'll give you a simple strategy. What business acquisitions is really about. It's not about money. It's never been about money. People who are successful in acquiring companies have never thought in terms of, I need $1 million, or I need $500,000, or I need $300,000. They've never thought that way. The notion that people need cash to acquire businesses has totally destroyed the mindset of a business owner. Right? But I'm going to tell you what you really need. You have to think in terms of a financial statement. We had an accountant before here, but who here could define what is a financial statement? There's only four components to a financial statement. What's that? Wait. Revenue? Revenue. Expenses. Okay, so hold up. You got revenue and expenses. That's a profit and loss statement. That's one part of the financial statement. And what's the other part of the financial statement?
No, it's the cost of running that if it's part of the expenses, but then it's the cost of running the business and then the profit.
Let's say, and believe me, that's parts of the components. But you got revenue and expenses. What else? Assets and liabilities. Okay, so you have assets, you have liabilities, you have revenue, you have expenses. And those are the four components of a financial statement, right? Now, The whole key to making a business acquisition is to look at your company and analyze what's your revenue, what's your expenses. Look at yourself as an acquiring principal or your partners and find out what's your revenue, what's your expenses. Same thing. What's your assets, what's your liabilities? What is your company's assets and liabilities? And what are we matching that with? We're matching that with the revenue and the expenses, right, of the actual target company. So you have 3 financial statements to play with when you acquire a company. You have the individual acquirer, revenue, expenses, assets, and liabilities. You have the company that's buying, revenue, expenses, assets, and liabilities. And then you have the company you're actually buying, revenue, expenses, assets, and liabilities. And what you're doing is you're combining the 3 to make a presentation to an outside money source, whether that be a lender or whether that be an investor. And the beauty is when you acquire a company, there's already a book of business, there's already customers, all of that is in place. So you don't need cash. And you could double the size of your business. You could triple the size of your business. Now, Louise, you bought out your partner. How much money did you put down in buying out your partner? 0. Now, I told you you could do that, right? When I first told you that, what did you say to me? No way. But I got you to see that that's possible. And you did it. Now, your partner told you it was impossible, right? And so did your accountant. Can you imagine? I have some people who could become, we have some BizGro clients in the room. But we have also some people in the room that we're trying to make you BizGro clients. I don't want to hide the fact that we're not trying to make you BizGro clients. So, some of you think that you can't make an acquisition. You think you need cash. Or you think you need this formula to grow your company, right? Louise, I said, you don't need money, right? And we made it happen. All right, I'll tell you why we did it. Because we thought in terms of financial statements. We didn't think in terms of cash. You thought in terms of what? Cash. We thought in terms of financial statements. So we combined your financial statement with the business that you were already operating, and we were able to help you make the acquisition, right? So that's a key component. It's just a financial statement. 2 types of business acquisitions. I'll give you 2 key examples to this. Then we'll end. First type of business acquisition is, you're a company, you're profitable. Now you're looking for other businesses that are not that profitable. Maybe you're doing $5 million in revenue, and who you're trying to buy does $500,000 in sales, and they're struggling, but they have some customers. And the owner doesn't really want to be there no more. And he wants to be a salesperson, and he's got some customers, and he has some clients. So what we call this is a fold-in acquisition, meaning the $10 million business buys the $500,000 business and doesn't really exchange that much money other than taking the owner on as a salesperson. And what they typically do is they'll pay that owner over time. Now, Marty, you have some experience actually doing this. Marty owned a significant logistics company, right? Marty, raise your hand. This is a partner, one of my partners. He owned a significant logistics company, and doing millions of dollars in sales, $20 million in sales, $30 million in sales. And you took over some acquisitions in this way, right? Of companies that are doing smaller amounts of revenue, right? So he was able to take over these businesses with no money exchange, right? Or at that time you had taken your company public and you issued public stock to them, right? So when a business is struggling, you can still get their accounts by acquiring them with no money exchange. All you have to do is market yourself as an acquirer. So we had a client who, he was in the corporate coffee distribution business. And he did $30 million in revenue. and he did significant amounts of profit, and he made 25 acquisitions of businesses doing $1 million or less in sales. And we were able to help him make one, actually on it, you were involved in that acquisition, where we were able to help him actually acquire a business. He's in Long Island, he was able to acquire another company in the Bronx. The Bronx company was doing $1.2 million. He was doing $35 million. He didn't put down any money other than there was some debts at the closing table he had to pay out, and he was able to take over this business. And the owner worked for him as a salesperson. The second type of business acquisition is a standalone, is what we call a standalone acquisition, right? The standalone acquisition is an interesting concept in that it's a business that, as a standalone, it's profitable. It produces money. And you as an acquirer might be profitable too. Or maybe you're not profitable. Really depends. And you come across a standalone and you're doing $5 million in revenue. But the standalone's doing $10 million in revenue. But if you buy the company and you're doing 5 and they're doing 10, what kind of revenue is your company now going to do after the closing? How much? 15. So now you have a $15 million business. Now in that business, maybe the target is producing profit and you're producing profit, so it makes it easier to raise money from an investor or a lender. And what are you using? Are you using your own cash? What are you using? What are you using? A financial statement. The financial statement of you, your partners, the acquirer, and the target. And that's how you build the deal. The use of the financial statement. And if you find a good deal, and you can promote it properly, you can make an acquisition and double or triple the size of your business, one deal. Sometimes it takes years and years to grow your company to that level, one deal. Right? So these are some of the components.